So let me just say hello and welcome. So I'm Philip Williams, better known as Phil, the founder of Fill the Gap, which is really a company that started to help people find and fill the gaps in their financial knowledge so they can make the best decisions or make smart decisions with your money. I certainly know that there are lots of things that you could be doing with your evening. I know time is precious, it's a precious commodity. So the fact that you've just made some time to sit on a screen here with me, it says something. So I know the obvious naturally is, so well, Phil, I want to learn more about investing or learn how to start investing. And that's the purpose of the webinar. But when you really think about it and dissect it, it's a little more than that. I would say the reason that you're here is because you have important questions about how to best manage your finances and you want more out of your life. You want to do better with the funds that you have, the income that you have. So I just want to say kudos to you for taking the time to invest in yourself and thank you very much for joining the Fill the Gap I Invest webinar, moving your money from your paycheck into your portfolio. So it is the 27th of November, which means we're almost at the end of 2025. If you blink twice, it's going to be 2026. So it really is a great time for you to, start thinking about where you are on your money journey and where you want to be for the year ahead, right? You might have specific issues, you may have worries, you may have some burning questions when it comes to your relationship with money and the decisions that you make. And somebody might say, well, Phil, my biggest worry is, well, listen, I really need more money. I need a raise. I need a bigger bonus. And I hear that, but I want you to just consider, um, if you are having challenges or you're not making the best with, small amounts of money or the money that you have now, it's going to be very difficult when you start making large amounts or making more money. I'll give you an example. So if you won the lottery or you inherited a fortune, you became a millionaire overnight, unless you know how to manage your money appropriately, you may find yourself in a situation where you have to upgrade your lifestyle, you know, not have to, you upgrade your lifestyle, you feel as though you have to do the most, and you end up right where you started wondering, well, listen, where did all the money go, right? So with that in mind, I have a question for you, just something for you to think about, where does all your money go? Do you know that? Do you know where your money goes? And if you do, that's great. You're certainly on the right track because when it comes to building a solid financial foundation, that is very, very important, knowing exactly where your money goes. If you're not, don't come down on yourself too hard. Don't feel too overwhelmed because there are things that you can do to change your outlook for your financial situation. I want you to understand that sometimes the whole money conversation can be daunting. Your feelings about money can be daunting. And a lot of times you might be actually doing better than you think, but a lot of times there's room for improvement as well. Now, before we get into the crux of the matter, which is investing. I just want to go over the five pillars of PTG and why it's important, even though we're focusing on investing today. And to just to be clear, the five pillars of PTG stands for fill the gap. Now, pillar number one, which is budgeting for your life, not for someone else's life, the things that you want is pillar number one. Pillar number two is saving with a purpose. Like, what exactly are you saving for? So, for example, a good example to be saving for, one of the first things you should be saving for is an emergency, the emergency that you think is never going to happen. So you want to start saving for that to have peace of mind. Definitely, if you have any kind of debt, credit card, any kind of loan, managing your debt is very, very important. Understanding how debt works, and certainly setting smart financial goals to push you towards, where you want to go. Once you have these four important pillars in place, then you can consider pillar number five, which is investing to create wealth. So you may have all of these things covered, but you may not, right? But with these five pillars, as I say in place, it's a good starting point, and this is the support for you to achieve your big life goals or any financial goal, for that matter. So yes, we are focusing on investing to create wealth, but before I move on, if you just think about it, if you could make a note to yourself, on your phone, you can write it down, the four pillars to think about if you have any gaps in these areas. And let me recap them. It's budgeting for your life, number one, saving with a purpose, managing your debt, setting smart financial goals, These are all things that are very important before you start investing. And again, if there are gaps, please know that there are things, you're not alone, and there are things that you can do to rectify that and have a better relationship with your money and put your mind at ease. All right, so I am going to start the presentation. So let me just share my screen so that you can see. Right, and today, so we are talking about investing. Just see investing 101. There's all right. Um, okay. So let me tell you what, right? A lot of times it's natural for you to want to get money fast. I get that. But the first thing that you need to know, and very, very important, because you work very hard for your money, you don't want your money just slipping through your fingers. So there are lots of people out there, dangerous people out there. If you are on this webinar and you've seen any message from something or someone resembling me, just a random DM, that is a scam. So I don't randomly reach out to anyone. I would put posts out there. I would, put information out there. And if somebody sends me a message, then I respond directly from my page. So anytime you get a random message, that is someone literally trying to scam you and get money to say, listen, if you invest X amount. So there's a lot of that has been happening. And those are things that play on your emotion. It doesn't mean that, it sometimes, somebody might say, well, how you will let that, how you let that happen? That would never happen to me. You might be surprised because these people are, with technology, it's very believable. So anything doubling your money overnight, tripling your money is too good to be true. That is not investing, and you have to be very, very wary of that. So I'll explain what investing is, right? That's what investing is not. Investing is putting your money in an asset, and I'm going to describe, the traditional assets that you may be familiar with, putting your money in an asset, working towards a goal. It could be a medium-term goal, a short-term goal, medium-term goal, or long-term goal, and you get a return based on how this asset performs. If somebody brings something to you and they're telling you that it's going to give you 1,000%, or you put in 10,000 and you get 100,000, if they can't explain how you're getting these returns, it's a scam. So usually assets have different types of returns, which I will share, and those returns are linked to the type of asset, the type of risk. That's what's going to generate the return or generate that income or growth for you, right? So investing is not getting rich quickly and flipping your money and tripling it. It's steady, it is discipline, it's putting your money in an asset for the long term to get a return. And it depends on the type of goal, how you would position yourself or where you're going to put your money. The traditional assets that we're going to talk about today are stocks, bonds, and mutual funds, as well as ETFs, which is an exchange traded fund. It's not, I know that there's a lot of, it doesn't sound as sexy as crypto, doesn't sound as sexy as, or the Bitcoin and stuff like that, which I know you're probably going to have questions on, which I can answer. And I'm certainly not saying that you should not invest in cryptocurrency. I'll answer that question, but I just wanted to stick to the, traditional asset classes and how you can get access to them. Well, first, how they work, the types of returns that you should expect, and how you can get access to them. So, just starting off with a bond. When you hear the term bond, so the government, if you listen to the budget or you heard about the budget, and I probably will do a post on it, I should have done, you would have seen that the government is talking about another NIF bond, NIF, right? They're going to have another one in 2026. That's an example of a bond. So there's a new investment opportunity coming up. Usually those bonds are oversubscribed. So really what a bond is now, just think of a fancy loan, a fancy way to describe a loan. Like if you went to the bank to buy a car or get a house, governments have to borrow money. Corporations have to borrow money. Governments borrow money to pay salaries, to build roads, to build bridges, just to do, to implement the programs that they have set out for various countries. So governments have to borrow money. corporations have to borrow money to buy computers, build buildings, invest, do research and stuff like that. And a bond is a contractual agreement between a lender and a borrower, right? So very important things to think about with a bond. Most important, when you invest in a bond, you are the lender. And there are different ways that you can access a bond. It could be directly or indirectly, which I say directly, meaning like if the government of Trinidad came out with a NIF bond, which has happened in the past and will happen, you can invest directly through a brokerage account. That I'm going to explain that later on. Or indirectly through a different type of product like a mutual fund or some other type of financial instrument. So the bond is going to issue, not issue, the bond that is issued, right? So when you invest in a bond, you are basically lending to a corporation or lending to a government, and it generates an income, and that's what is handed over to you over the time of the bond. Now, the bond could be, so this is an actual example. I know I mentioned NIF, but this is an actual example of a bond, which is an NGC bond. So the NGC borrowed money. Now NGC is owned by the government. The interest or the coupon is 6.05%. That's the interest that's paid annually on this bond. The principal, which is the amount that is borrowed, is $400 million. The maturity date is the 15th of January in 2036, meaning all of the money has to be paid back in 2036. But during the life of this bond, you're going to get paid if you invested in this bond or investment company invested in this bond, you would be getting 6.05% on an annual basis. And bonds have credit ratings the same way that the bank is going to look at you and see how much, what's your debt to service ratio? Are you really good enough to get this loan from us? Can you pay us back? How would you pay us back? It's the same way that international investors look at corporations and look at countries to determine if they're going to lend them money. So this is a real live example of a bond that has been issued and is going to mature in 2036. Mind you, there are tons of bonds out there. There are many, many types of bonds in the capital markets. But I just thought that I would show you that because it's an actual example. A stock is another way. So there are two ways that a company can raise money, right? Which is by issuing a bond. So the same way governments can issue bonds or borrow money, corporations do as well. But the other way for a corporation to get capital is by issuing stock, meaning, listen, I have this company. The company is, what, I need some more capital. So I'm going to sell some of these shares. And anybody who has I'm seeing some hands raised. If any question that you have, you can just type it in the chat and I'll scroll through after so that I can answer. Sorry about that. If you're joining, welcome to the webinar. So a stock again, right, is a way for companies to raise capital. It's used to sit you back a corporation, a company to get capital to do stuff that they need to do. When you invest in a stock, basically you are a part owner. And there are many different companies that you can invest in on the stock market, local stock market in Trinidad and Tobago, as well as you can invest in the international stock market. But today the focus is on the local stock market. So that is really what a stock is, part ownership in a company. And corporations do that so that they can get capital. So they give up some of the share of the company. Now that you're a part owner, you have a right to or share any profits once the company does well. Now, stocks have a little bit more risk or more risk than bonds because a bond is a contractual agreement, meaning that 6.05%, you're almost guaranteed to get it back. It's a contractual agreement. You know exactly what you're going to get at the end of a year and at the end of the life or the maturity of the bond. And the reason why I say almost likely or guaranteed is because contractually that's what's supposed to happen. But sometimes some governments default on bonds. They lose investment grade rating. Sometimes the same things happen to corporation, but the chance of that happening is usually not as high, like a stock or company not performing as well. And there are ways to assess whether a company is doing well. That's why they have financial statements and they have people that's their job to really look at a company to determine how well the company is doing. Also, you can also look at a company's track record to determine how they've performed in the past. And as much as past performance is not a guarantee, it certainly is a gauge of how this company is expected to go forward. So anytime somebody tells you, well, that stock marketing, that's like gambling, it's not. If somebody just told you about a stock that you knew nothing about and it's some kind of penny stock and there's limited information, it's just that's gambling. But if there's a story about the company, you can look at historical returns, the revenue of the company, how the company's capital is structured, what debt they have, what's really going on, what plans they have for the future, then that's not gambling. That's making an informed decision so that you can make an informed investment decision, and that is not gambling. A mutual fund, and I want you to pay attention. So just pay attention because they might have some prizes at the end. There might be. Might have a couple of questions. I know you have questions for me. So mutual fund, just think of all of us here on this webinar. Let's say we pooled our money together, gave it to a professional manager to manage for us. He might charge a minimum fee of say 1 to 2%. He makes the investment decision. So that's what I talk about when you have a mutual fund. It takes a lot of that heavy lifting away from you if you're a new investor. A mutual fund provides you with that opportunity. It also gives you an opportunity to get into or get access to stocks and bonds at a fraction or a smaller price. Sometimes investing directly in a bond, more than likely would be a little bit more than investing in a mutual fund. Investing sometimes directly in stocks, would be the startup amount would be as much as starting with a mutual fund is not as much as investing directly. But that doesn't mean to say that it is far reaching or not accessible to invest in stocks and bonds directly. But this is a way, if today is not a day for you, definitely a way for you to get indirect access to stocks and bonds is through a mutual fund. So again, a professional manager with people who have finance backgrounds, they have finance degrees, they have years of experience in investment management and economic research. These are the types of people that look at the assets that they are going to now put inside of this mutual fund, and the returns are passed on. So remember, there's income coming from bonds, there's dividends. Two ways that you get money from a stock. Just let me rewind. It's from dividends, which is a share in the profits, and capital appreciation. Capital appreciation means, boy, I bought this stock today at $1. Moves up to $1.25 or $1.50 because it did well. More people want to buy the stock. Revenue projections look good and it creates demand. Those are the things that pushes the price up of a stock, and you get capital appreciation as well, right? So this is a mutual fund. The different types of mutual funds, there's an equity fund, equity, stocks, shares is all the same thing. There's more risk in investing in equity. So these are the types of returns that you can expect investing in an equity fund. I would say the 10 to 15% is a little bit aggressive for the type of market that we're in right now, particularly our stock market is not doing as well. But typically average returns on a stock market is 7 to 10%. A balanced fund has equity and fixed income. So you'll have stocks and bonds in it. That's for somebody who is, they want the best of both worlds. I want to get some aggressive returns, but I want some balance. Fixed income is mainly 100% like bonds and short-term instruments. So that's somebody who really is just looking to preserve capital and not take on too much risk. And a money market mutual fund is super safe. It's ultra, like, there's limited risk there, very short-term in fixed income investment. So there's still debt oriented, or the base of this is debt, but it's short-term debt. So a bond, it's anything more than a year going forward. So they might have 2 year, 3 year, 4 year, 5 year. They have bonds going all out to 20 years, but they're also money market instruments where money is loaned for days that are shorter than 365 days between banks or different financial institutions. And the returns there, because it's safer for the length of time that the money is being loaned, and more or less the return is guaranteed. So there's limited risk in a money market type of mutual fund. More risk in fixed income. You're taking a balanced approach with a balanced mutual fund and an all equity fund. You're really looking for a long-term type of goal, very aggressive, saving towards something for the future, right? Um, This here, I just thought it would be useful to show you the list. These are all mutual funds listed in Trinidad and Tobago. This is just an example from the various houses. So there are tons of investment products here. The reason I put this up is it's important for you to know what type of investment that you're making. So a lot of times people say, well, I have this mutual fund. What type of mutual fund is as well? I'm not so sure. I don't know. So it's important for you anytime you're investing in any financial product for you to sit with whoever the CSR is, whoever the salesperson is, to ask them, what exactly am I getting into here? Is this mainly equity? Is it equity and bonds? Is it fixed income? I'm thinking about a long-term goal. Is this best suited for that? Right? So these are the income, TT dollar income funds and US dollar income funds available and registered with our regulators in Trinidad and Tobago. These are some of the equity funds here across the companies. Equity, as I said, um, or balance funds as well. Some of them have all equity, some of them have stocks and bonds, but these are actual examples of funds that are registered and listed in Trinidad and Tobago through various providers. And these funds are invested in local stocks on our local stock market, more than likely international stocks and local bonds, government bonds, corporate bonds. So it's invested in a lot of the instruments that I would have described earlier on. So this right here is a pool of assets managed by a money manager, and the income is passed on to you as an investor if you invest in these funds, right? So I guess now to the part that I guess everybody is really, really interested on, because that's why you joined the webinar, right? You want to know how the stock market works, and get a little bit more information in terms of how you can get access to the stock market. So this is where we at right now. So again, when companies want to raise money, this is what they do. They decide to sell part of their company to, they sell the shares and list it on a stock exchange, and people have accessed it. So anytime you hear, so last year, anytime you hear like there's an IPO, that is an initial public offering. We haven't had many of those, but we've had a couple over the last 2 years. When you hear that, an initial public offering, it means a company is deciding to sell some of their shares to get capital to do whatever it is they need to do, and they're making these shares available to the public. Because sometimes, there are some companies that are private and it's closed to certain types of investors. So once a company makes their shares available to the public, then you have an opportunity to invest directly in the stock market and have a share in some of the company in the profits that these companies make. You always use this as an example. If you follow Fill the Gap, you would see me talk about the earnings from time to time of companies. Many of these places you may shop in. So if you're building a house, you buy cement. If you shop at Massey, if you drink alcohol, if you read the papers, if you have a loan with any one of these financial institutions, if you shop at Superfarm, if you eat KFC, all of these things, you are a consumer, and that's okay. But I want to remind you that you don't only have to be a consumer, you can purchase shares in some of these companies, or these companies that you see listed here, these logos that you see listed here that are listed on our stock exchange. But to do that, you would need to have a brokerage account, right? That's what you need. So I've mentioned this in many of my posts. So a brokerage account is really the middleman between, you and the stock market. So if you want to purchase shares, you have to open a brokerage account. And think about a brokerage account, like putting money into a bank account. So that's the brokerage company there, sorry, right? And when you put the money in, you give the broker instructions, maybe by the telephone, maybe via email, say to buy one of these companies. Say you wanted to buy one of these companies here. You give them instructions to buy, and they charge you a fee. So let's say the stock cost $100. The brokerage fee could range anywhere between $1 to $1.20. So it's like between 1 and 1.2%. That's the brokerage fee that the broker is going to charge you to get, to make sure that this trade happens. And then you get your investments and you hold it. Hopefully it does very well. And what I want to remind you, remember, when you're investing in stocks, it is not short term. So anything beyond 3 years, 3 to 5 years, that is considered long term. If you need money within 12 to 18 months, or let's say, 24 months, maybe the best place to put it is not in the stock market, because again, you have to give yourself time to reap the benefits of a long-term type of investment, right? So this is what you need to do to buy the stocks. Just quickly here, I know purchasing stocks on the stock market is very exciting, and you can do it. Just for you, you need to ask yourself, is this the right thing for you now? So remember, I spoke about setting smart financial goals in as one of the pillars. Today may not be that day for you because if you have high credit card debt, that's a bad idea. You should be taking your money to pay down that debt. If you don't have any emergency funds, it's not the best time to invest because if something happens and you have to sell your stocks, it may not be the best time to sell stocks for an emergency. And when you have an emergency, you need money quickly. So sometimes it might take a little while, like you need money quickly, like immediately. It could take a little while to sell shares, so that's very important to note. And if you are very, very risk averse, meaning like if you invested $1 and then tomorrow it's 95 cents, that's going to keep you up at night and you're going to have challenges sleeping. Definitely you need to think about that. So if the answer to all of these are yes, like a hard yes, maybe it's not the best time for you to start investing. The only one where I say there's some compromise on, definitely not high credit card debt and no emergency fund, an extremely risk averse person, I will caution you to let you know that's good to know that about yourself, but I will caution you to let you know that there's risk in not taking risks. Remember, if you don't take any risk at all, you're not giving yourself the best shot to get those long-term goals. And one of the best ways to achieve long-term goals is via investing in the stock market. Finding a suitable broker. This is not an advertisement. These are just the brokers that are listed on our stock exchange. I do have, I would say, a relationship with one or two of them. I have a brokerage account as well, more than one brokerage account. And this is something that I assist with. I put people in connection with a broker for them to then take it. So I'm not a broker. I'm not a registered broker. I am a registered individual investment advisor, but I am not licensed to do any kind of brokerage services or collect money from anyone. I am not licensed to do that, right? So just I thought that I should mention that these are the brokers here, and there's information on all of them available online. I know the usual question is, well, Phil, what's the usual starting amount? Sometimes when there's an IPO, I know a couple of these companies here, well, one in particular, they allow people to open a brokerage account with $1. A couple of them here, the minimum starting amount is 2,500. Some of them, it might go one or two of them, it's a little higher than that. It might be 5,000. For one of them, it might be 25,000. You just have to find a broker that's suitable for you. The services that they provide, and B, the starting amount that, to open the account. A broker is a broker is a broker. When I say that, I mean, if you just want to invest in the stock market and you're getting the right investment advice, whatever shares you buy, it's the same shares. You're not going to get better shares here or better shares there. You might have a different type of service. So any one of these brokers can put you in touch with the stock market once you open a brokerage account. All right. Um, I just thought that it would be useful to share this as well. This information, well, when I last did the presentation, these were the top performers. I don't think that holds, but the most important thing is the returns over the years. So starting from 1984, what the returns on the stock market would look like. You'd see some years that are very, very green, some years that are light green, some years that are red. So the point is stock markets go up, they go down, they fluctuate with economic performance. I meaning what's happening in the economy. So for, let's say, for example, like Trinidad and Tobago, our economy is built on oil and gas. So, things that happen in the oil and gas sector will impact our economy. And the stock market is a leading indicator, or should be generally is a leading indicator of what's happening in the economy. So if things are doing pretty well, the stock market is expected to do well. If things are not doing so well, stock market is not going to go so well. But that doesn't mean that you don't invest, because the time when you want to invest is sometimes too when you're getting stocks for a cheaper price. It's say like buying $1 for 50 cents or buying $1 for 75 cents. You want to buy an asset that is undervalued so that you can reap the benefits over time. So I just thought that this would be useful. This is our TT composite on all TNT index, meaning all TNT, all of the companies that are domiciled in Trinidad and Tobago. And the composite index, we do have companies listed on our stock exchange across the Caribbean, particularly in Jamaica. And this is a trend of how it has been, or the numbers that you saw before. This is the graph here. Why I'm showing this is for you to just get a sense of the general trajectory of the stock market is up, right? You're going to have some choppy times, but if you're in it for the long haul, you stand to benefit. So very, very important things for you to know before you get started. I'm using this example. This is not, I have to put out, just to be clear, a disclaimer. This is not a advertisement for the bank. This is an example of what I would say is the largest indigenous bank, the largest company on our stock exchange just by market capital. Republic Bank sells loans. That's their business. That's the raw material. If you have a loan in Republic Bank and you pay them interest, then you support the profits that they made. You just saw that they made like around $2.2 billion in profits. I know there's a lot of noise in the markets on Republic Bank right now, which I cannot comment on, but so definitely the track record shows that this is a solid company. And I was just given an example of what your return would be if you invested in this company over 30 years. 30 years might seem like a long time, but remember when you're investing for you, you're not just investing for you. You're investing for someone else's future. You might start when you're a young person, and in 30 years, you'll be surprised when you're 40, 50, 60, when you're heading towards retirement. That is definitely something to think about. So I just use this as an example so that you have an idea of the potential of what the stock market can do. Every company is not going to generate returns like this. The stock market is not going to do very well every year. Republic Bank is not going to perform and sell, a whole heap of loans or do very well every year. But over the long term, once you stay disciplined and consistently contribute to investing, that's the fastest way to generate wealth. It sounds boring, I know, but it is heart aching and painful to look for quick money, to get rich quickly, and you lose all your money in a heartbeat, right? And that amount there that's the amount of investing $10,000. I think it was $1,000. This is what it would be at the end of that period. I think it's yes, $1,000. Um, Consistently over a period of 30 years. This is an example of someone starting to invest, and I just wanted you to know that time is money. It's very, very important. Time is money. So this is someone investing $1,000 over starting at 20. And I know everybody on the call may not be 20, and you may not even be 25, you may not be 30, you may be 40. A younger person may not be earning as much as somebody who's in their 30s or 40s, so they may invest less. So even if you haven't started investing, it is not too late, right? You just have an opportunity to be a bit more aggressive, and your earning capacity should be greater at this, a later stage in life, so you can contribute more. But this is an example to say, well, listen, someone's starting at 20, and I'll show you what happens if someone started at 30. $1,000 over 30 years, I use a rate of 8.1% as an average return in the stock market, $1.5 million, right? So your contributions are three 360,000, sorry, and your total interest 1.1 million. So this is an investment calculator. This is but check the difference if somebody started at 30. You're just around somewhere around 600,000. Your contributions are 240,000. Your interest is, just 360,000. So the point I'm trying to get at here is that it's really, really, really important to start as early as you can. Even if you're not 30, even if you're not 35, if you're not 40, you can still start. It is not too late. And it just means that you have to be a bit more deliberate and be a little bit more aggressive with your investment strategy. Now, or so this is just so I mentioned all of these things. So before you start investing, there are some tools that you may need to help you sharpen up on to get to the point to help you with managing your debt, setting smart financial goals. I do seminars on this as well, but naturally the one that people are very, very interested in is getting, how to get started with investing. And I do have an I Invest course, which provides all of the tools to get you on the right path with the financial, the PTG pillars, as well as helping you to get access to a broker, giving you the tools that you need to know if a company is a good or a bad investment, and if you should be investing in this company or not. So it really is a comprehensive or personal finance and investment education course. So I just will share this video with you before I begin to take questions. Welcome to the Fill the Gap I Invest program. I'm Phil, and I am really happy you chose to take the next step of your financial journey with me and Team PTG.
And when it comes to making big life choices, especially when it comes to money, we're all looking for a foolproof plan, 100% guarantee, which is probably why the question I get asked over and over and over again is, Phil, what is the best investment? Now, truth be told, there is no such thing as 100% guarantee. But what I can guarantee is by far the best investment you will ever make in life is the one you make in yourself. More specifically, in your financial education, which will have a positive impact on your emotional health. Now, whether you're here because you want to be able to pay your bills on time, every time, without worrying, provide everything you've never had or more for your family, start or expand your business, get married and move into a dream home, travel whenever you want to, have more than enough to pay off your credit card in full every month, understand how best to make the most of your inheritance, or you fill in the blank with your specific reason. This course is designed to meet you right where you are, and only you know exactly where you are. So where exactly are you? While you take some time to think about that, I want you to know that my job is twofold. First, I'm here to give you the lowdown on the non-negotiables needed for building a solid financial foundation. That insider intel will help you to both identify and fill the gaps in your knowledge. Next, I'm here to encourage you to use that information to take confident action. Your job is to be clear on your personal and financial goals. You need to be honest with yourself, make adjustments along the way, but as long as you are patient and consistent, you will see exciting results. Here's what you can expect. There are 5 modules with topics and accompanying exercises, videos, and voiceovers for you to work your way through at your own pace. My suggestion is that you complete them in order, because as tempting as it is to skip to the good part, sometimes we need gentle reminders of stuff we already know. And who knows, you may even discover new ideas about those things you already know. I know you may be eager to get started investing, but before you begin your investment journey, it's important to assess your personal financial situation to know if it's the right time to start. The PTG resources and tools provided will help you to prioritize what's important to you and help you to align your finances with your values. I'm going to be with you along the way. You'll receive a monthly newsletter with gentle money reminders and information to motivate and empower you to take action and keep going. You'll have access to quarterly webinars that focuses on specific sections of each module with time set aside for you to ask questions and get clarification. You can also email any questions you may have. Now, before we go any further, please rest assured that I am also on a financial journey just like you. And even though we might be at different stages, I had to identify the gaps in my financial education and find the information to fill those gaps. Next up, we're going to look at where those gaps may be for you and how you can fill them too.
think, I think I see. Yeah. So I think that brings us to the end of the presentation or the webinar. And I know that so I'm going to look and so I'm seeing that there are questions in the Q&A. So I'm going to try to address them. I'm just going to go through bit by bit. I saw people raising their hands during the seminar, so I'm just going to take them one by one. And of course, in the meantime, if there's a question that you do want to ask, certainly, this would be a good time to drop it in the chat. Okay, I read the new laws. So Jason is asking this question. I read the new laws of the ban on forex trading. Does this, what does this? what you're selling may fall into that category of what the government doesn't want citizens. Okay. Is that no, no, no. So it's and the ban is on digital assets. It's not forex. Well, I know if the forex trading that you're talking about, typically, so my understanding of it or my information is, you may have an auntie or uncle or cousin or whoever they came from abroad. Basically, they're saying that, any fine forex transaction should be done through whatever, means or legally, and they have set out the parameters of how that can be done. So I don't think it's a ban. They're basically saying how these transactions should be conducted, which is through a registered financial institution. So you shouldn't be buying US like that. I'm certainly not going to pronounce on. I'm not. That's whether that continues to happen or doesn't happen or should happen. I have no comment on that. But I'm sure people are going to do what they think they need to do. So some people are going to go to the banks to get their US, and some people may very well continue getting US from family members or however they get family members, get US from, sorry. The ban that I think if there's the most recent one, which is like a couple of days ago, is the ban on digital assets. So it's cryptocurrency, and that bill was just passed. And basically what the government is saying is that they need to regularize the industry and have a more robust regulatory environment for these types of assets. So they put a ban on it until 2028, well, the end of 2027. I hope that answers your question, Jason. I joined a little while late. Can you repeat the five pillars? Okay, so the five pillars are budgeting for your life, right? Saving with a purpose, managing your debt wisely, setting smart financial goals, and investing to create wealth. And today we focused on investing. Hello, I would like to find out where I can access these recorded sessions. So this will be mailed to everybody who is on today. I think usually what happens is sometimes you can send an email to admin. Let me type it in, admin@fillthegap.co, or you can send a DM. I'll put it in the chat. You can send, but the session is being recorded because I know that there was a change in time, and I do apologize about that, but we had to change the time, and that's how we ended up here. But I'm seeing that there's still, a significant amount of people in the chat, so I'm very happy about in the webinar. So I'm happy about that. So certainly we did record so that people who weren't able to attend, as well as people who just want to use it as a reference, right? Um, to Right. Hello. I would like to find out where I can access these recorded. No, the financial trajectory of someone who is over 40 and invests for 20 years. Yeah, so if you are starting at 40, that's what I'm saying is you should be earning, well, hopefully you're earning more at 40 years old. Your earning potential is a lot greater. Hopefully that's the case. So you have one, even though you have less time, that's okay, but you have more money to set aside. So you can start at 40, right? The thing I would urge you to consider, the closer you get to retirement. So at retirement, let's say you closer you get to retirement, you don't want to be putting all of your money in risky assets because that's bad financial advice. So I usually say if you have $1 to invest, if you're 20, take 20 cents, put it in a fixed income or money market type instrument, put it in bonds, and take that 80% and put it in growth like equity and equity mutual funds and stocks because you have more time as you start to move along. So if you're 30, put 30 cents in safe, 70 cents risky, 40, vice versa, 60% in very risky assets, high growth assets, and 40%, 40 cents of your dollar in safer assets. So you just want to start tapering down on the type of risk that you take when you get older. But certainly, 40 listen, you can start. So don't think that it is too late. You do have an opportunity to start. Do you do consultations? Yes, I do. And the course that I just mentioned, the I Invest course, gives you access to me. I do also do one-on-ones, but the reason I started the I Invest course, because it just gets very difficult. So some of you may or may not know I do have a job, a day job. I work for an investment company. So part of my job, I work for a mutual fund, it's an investment company. So part of my job, well, the main part of my job is looking at investments and making investment decisions during the day. And I fill the gap on evenings and at nights and on weekends. And that's when I would have the opportunity to do a consultation, but sometimes it was getting to be a bit much. But I do, depending on, the situation. But a lot of the things that are discussed, I tailored the I Invest course for the typical frequently asked questions. Setting up a budget, knowing how to calculate your net worth, that's really a starting point where you're at, helping you to write down your financial goals and think about where you want to be, learning about, where you are with your financial situation in terms of the debt that you have, should you be consolidating your debt, how much of your debt you should be accelerating to pay down, all of those are the types of questions that I usually get when I'm helping somebody to set them up. So I tailored the course, with the videos, and with access to me that will help you to be on a solid footing so that you have those 5 pillars. But certainly if you do, if you think, what, Phil, I don't think the course and getting access to a broker and right advice in terms of the types of investments that you should be making. That's what you get when you purchase the I Invest course or invest in the I Invest course. But if you think a one-on-one consultation is more suitable, certainly reach out. Let me know that you were, because I'm seeing it as an anonymous attendee. So just let me know that you were here today and you're thinking about a one-on-one, and we can talk about that when let me get a sense of what you're thinking about. If you think the course is not suitable, is it more affordable to purchase a bond after its issue date? It depends. So a bond is usually issued at par, meaning let's say it issue at the price $100, right? Usually that's what happens. What can happen, because bonds are linked to interest rates, and similarly, like stocks, things, when if there's high demand for a bond, as in a lot of people wanting to purchase it, as well as if interest rates start to go down, that pushes the price of a bond up. So let me try to make that as simple as possible, because I know that might be complicated. Why, if interest rates go down, right, general interest rates, why will the price of a bond go up? So think about this. If that 6.05 NGC bond, the coupon was issued in a particular year, issued at 6.05%, that's the coupon and it's fixed. If general interest rates go down and go lower, it means now you have an asset with a higher coupon or higher interest rate, which is more attractive to investors, and more money is going to flow to that. And that's what pushes the price of a bond up. So after the issue date, you might find yourself purchasing a bond a little higher, but that should not stop you. As well as if interest rates go up, the price of a bond goes down. So now interest rates went higher and things are higher than the 6.05%, money is going to flow there. So you might find that prices could drop, but it's not like a huge drop. The bond market is not as volatile or as fluctuates like it doesn't fluctuate like the stock market. I hope that answers your question. Anything that I'm not addressing appropriately, because I know I couldn't have everybody. There's a lot of people on the webinar, and so I know you don't have the chance to basically ask a question. But if you send a DM or send an email with the question or questions that we weren't addressed today, I give you my word, I will address it. I may not address it tonight or tomorrow, but I certainly would get it at some point in time. So just don't be afraid to or hesitate to reach out. I purchase stock from a company IPO. Does this mean I automatically have a brokerage account, or would I need a brokerage account to purchase other bonds from other companies? Once you purchase you got into an IPO, it means that you would have had a brokerage account. So you have access to the capital markets. You have access to the stock market already. You have access to the bond market. What you may not have is access to the right information to know exactly what to buy or a second opinion in what you should be investing in. And that's what you get with the I Invest course, and getting the right type of financial guidance. So, but yes, once you got an IPO, Vian, then you already automatically, Vian, once you automatically are in um have access to the stock market and have access to the bond market. You don't need to go and open another brokerage account, so you're good to go. What is the cost of the course? The cost of the course is $1,300. Um, how can you increase shares that you got via work? what is the process? How can you increase shares? Okay, so this is someone who you probably you work for a company that gave you shares probably as a like a yeah through a program, employee a stock option program. So what would happen? So the stocks would be held in an account, but what would happen? I think you would still have to open a brokerage account. You'd have to open a brokerage account. You identify one of the brokers and to increase the amount of shares that you have if that's what you want to do. So the process would be opening a brokerage account with one of the registered brokers that I shared earlier. Um, would it be possible to invest in one foreign bank in Panama? Well, it just depends. So on our local stock market, no, that wouldn't be possible. But if you invest on the international stock market, depending on which exchange it's on, it's possible that you may be able to. But it depends. I just don't know because you just listed it as just a foreign bank in Panama. But if you wanted to, just let me give a broader example. If you wanted to invest in companies in Asia or the UK or United States or Latin America, you'd have to open an international brokerage account, which is that's another session, but you can. A similar process, a bit more sophisticated. When I say sophisticated, a little easier, and those markets are more sophisticated because they're far more developed than our stock market. But that doesn't mean that there's not opportunities on our local stock market. Do you think FCB is a suitable broker considering the current manipulation of the share price? Do you think the affects them operational wise? So let me say something here that I would have to let everybody understand. Because I work for a financial institution, I'm very careful on how I comment on other financial institutions. I can't even make a comment on the financial institution that I work for. What I would say is there lots of times you see speculation in the papers. So it does not, so I'm not saying that the price is being manipulated or not. I'm not making a comment on that. What I would tell you is there are ways to assess a company, meaning you could open the hood like a mechanic and see what's happening under the hood and know, okay, this is where profits are at. This is where the capital is like. This is the amount of debt the company has. These are the plans that the company has, and if and you could take a look at the actual data and make a determination if you want to invest in a stock. The stock versus a broker is two different things. So opening a brokerage account with FCIS, which is First Citizens, that's their brokerage, that's the brokerage business that they have, FCIS. They're just as good as any one of the other brokers. As I'm saying, it depends on the type of service that you are looking for. So some of them provide different services. So don't let the share price or the perception of what is happening with the share price or the perception of whatever is going on because you saw it in the papers, um, deter you from opening a brokerage account with FCIS. And if it really is a bother to you, then there are other brokers that you can choose, right? And if you want direct access to a particular broker, as I said, I have direct access to one of the brokers in particular, that you get that direct access through the course. I can put you in touch with that broker. So I hope that answers your question. I am interested in opening a brokerage account that I can make regular contributions to this is Jude, but at present, I reside outside the UNT. What do I need to do? You can be a foreign national and open an account. So it will be the same process. You may have to get one or two of the documents or something notarized, but you can open an account in Trinidad and Tobago as a foreign national and invest on our local stock market. It will be similar process, but much of it you probably would be doing via some of it online, and maybe you may have to FedEx some stuff or scan some stuff out, get some things, as I said, notarized. But it's the same KYC stuff. You have to know your customers, so they're gonna want your IDs and proof of address and things that they would need to. It's just like opening a bank account, right? But the short answer, Jude, is yes, you can. What are the differences between brokers, and do you have any suggestions on a broker? So as I said, there's one broker I do have direct access to. I'll be careful not to mention, I have to be very careful in terms, as I said, I work for a financial institution, and I don't want to give the impression that I am pushing one broker over the other. As I said, they all provide various services, but any one of those brokers that I put up there can give you access to the stock market. And if you do want to get direct access, you can just send me a message, send me an email. Um, or purchase the course. And as I said, you have access to investment guidance as well as getting the account set up and knowing what to invest in. Um, are you able to comment on a transfer upon death for bank or brokerage account? Well, that is a question for the brokerage account. So it's whatever is the procedure there, they will be able to guide you. I know it's a bit of a, I know it's not as simple as it may sound. So that's why I wouldn't comment, and I would let the brokerage firm is going to guide you on that. So I would suggest that you send an email to them. All of them have their email address on the stock exchange website. Like all of the information you need. All of the information, not all of the information, all of the brokers. You can get to them on the stock exchange website, and the information in terms of how to contact them is there. Um, can you mention the procedure to start a brokerage account? I think that was answered, but as I said, to start a brokerage account, you can start with as little as, in some instances, $1, but in most instances, it's somewhere around 2,500. But it ranges across the broker, but it's like opening a bank account. I felt a relative invested in an IPO with FCB years ago. Was he to make monthly payments to increase his shares? He was very new to investing. No, he wasn't, but it would have been great if he did. Right? So remember with investing, the best type of return to give yourself is to contribute consistently. So let me explain that. Sometimes people say, boy, I have this lump sum, I'm just gonna put down $1,000 and just hope that it mysteriously grows to $1 million. If you have $1,000 and you're earning 10% on that $1,000, then why not put $2,000? Then or $3,000? Why not consistently contribute? Because the fastest return, because it's the same 10%, but now it's 10% on 3,000 or 10% on 5,000, 10% on 10,000 versus the amount that you have. So any opportunity that you get, I'm going to say this, you have a finite amount of paychecks or opportunities to earn, finite amount of bonuses. Even if you're an entrepreneur, even that's even a little bit more tricky. So you have to be a bit more disciplined. So every opportunity you get to move towards your financial goals, you should make a contribution to pay yourself. And paying yourself first means setting aside money for your future self. So you pay yourself first before you invest, not invest. You pay yourself before you pay anybody else, before you pay your bills, before you pay the gym, before you go on your avenue, before you go to wherever. Set aside money for saving and investing, pay yourself first, right? Because one man's spending is another man's income, and your business is very serious business. So you have to take your financial goals very, very serious. So he can still continue to invest. So, but it doesn't matter. His shares will be there, and he would be earning dividends over the time that he invested. If he invested in the IPO, he would have been earning dividends all along the way. What app or website can I do investing on? So in Trinidad, there's not really an app. The stock exchange has a platform, Top, so you can register through Top to do trading there, or you can trade or invest directly through your broker. So you could use Top with it having any one of the through any one of the brokers, or you can go directly to the broker. But we don't really have an app. The international markets, they tend to use an app to invest, and you can do it on your phone. Great work again, fellows. This is a nice message. I follow you on IG and Facebook. Love the work you're doing. Great advice. I work on the debt part ATM, but heading to work on my road. Great. We need more people on it. Yes, we do. We need more people around. That's a very lovely message. I appreciate you, my friend. Thank you for that heartwarming message. Yes, we do need more people investing, and we do need more people on the stock exchange. How do you get access to the course? It's on the Fill the Gap website, which is www.fillthegap.co. I can drop it in the chat. Also, you can just send a DM if you follow. Let me see. Can anybody see the chat? Mm, yeah. www.fillthegap.co is there, or just if you send a DM or send a message saying, Phil, I want to get access to the course. I want to get access to open my brokerage account. I need some investment guidance. Um, Someone is going to contact you. Good evening. What percentage of retirement lump sum should be invested? Well, good one. So investment retirement, but you get investment money, you definitely don't want to put it in risky assets like stocks. So you would have been, hopefully you would have been saving and investing and doing all the things. So now you want to live off that money. If you have so much retirement money that you want to put it in stocks, maybe it's for a grandchild, maybe it's for one of your children, and then that's fine. But money that's for you at this time, you shouldn't be. You should be putting it into a fixed income type. So the investment should be safe. So you could put it into a bond that will give you a steady income, like a safe investment grade bond will give you a steady income. Put it in a fixed income in mutual fund, very, very safe, because now is not the time to be playing around with the money that you've worked hard to accumulate and being subject to fluctuations, right? Remember, we spoke about the risk and how we break that down. If you have 10 to 12 years before you retire, what should be the best type of investments for that short period of time? So again, 10 to 12 years, so that probably means you're around 50, yeah, 48. I know they're going to extend the age. I would say, so it's 50-50. You want to put some in an equity, I would say split it 50-50. But you certainly don't want to be putting most of your money in risky assets. So you want to put like anywhere between 60 to 50% in like fixed income. So you want to invest in bonds, you want to invest in fixed income instruments, and then take that 40 cents and pump it into an equity fund, pump it into the stock market to give you some upside 10 to 12 years. So I would say split the dollar 50-50, meaning 50 cents of your dollar. So if you had $1,000, just put 500 here, put 500 there. Split it across fixed income and stocks. What's the starting cost of your beginner's class to start investing? So I did mention that earlier on. And sometimes I do specials. It depends on Christmas time. But the value that you get in that course, and when you compare it to other courses, there's a lot of value in that. If you check out the price of other courses and what you get for just one module, this is 5 modules with everything that you need, plus access to me, plus investment guidance. I'm not saying that it's a steal of a deal because it's my course. I'm really telling you there's a lot of value in there to set you on the right path. Get access to all of the tools that you need to get, your financial situation where you want it to be, with instruments that allow you to invest where the interest in is from 4 different funds: corporate bonds, mortgage funds. This is considered a good financial advice to enter. So if it's an instrument with 4 different funds: corporate bonds, mortgage funds, um, I'm not clear on exactly the question, Giselle. So I'm going to attempt to answer, but maybe this is one we may have to take offline. You might have to send me an email or um, send me a DM and we could chat. Probably need to give me a little bit more information, but because it's difficult to say because you don't know. What I would tell you, if it's corporate bonds are safer. They're little more, they're safe, but they may have a little more risk than a sovereign, which is a country. So think about a country, think about one of the banks issuing a bond or one of the companies on the stock market issuing a bond versus the government of Trinidad and Tobago. Naturally, the government of Trinidad and Tobago will be expected to be safer, or should be. There are some instances where there are some companies, because they have generate revenues outside of Trinidad, their rating might be a little bit higher or be considered a bit safer. But generally, bonds are safer. So corporate bonds, once it's an investment grade bond, which you can check. Mortgage funds, once it's good mortgages, and they could tell you what type of mortgages it is, because they do rate mortgages as well. What you're being paid on is, I guess, similar to that. Sounds like a REIT. So they have, they pool mortgages together and people pay their mortgages and you invest in that and you get a portion of that. So it may very well be a good investment. But I need a little more information just to give you proper advice. So as I said, I'm making a commitment to assist you with that. If you want to reach out to me and say, hey, Phil, I'm the person that asked about this question, right? Can I have your contact information, please? Sure. You could just send me an email. Let me put the email. Were you able to see the website? But the email is admin@fillthegap.co. So let me put that in. Let me see. Admin@fillthegap.co. Admin@fillthegap.co. Yes. Are you all able to see any chat? Yes? If you could just put up your hand. Yeah. So, and I will tell you how to get in touch with me. Just send me an email there. Let me know that you were on the webinar. This is Lizette, Miss Alexander, right? Yes, sure. Um, what's your one-on-one course? I'm guessing I can't pay it. Ha ha ha. Wow, somebody's cheeky in here. No, you can't pay in Guinness. That's obviously somebody who knows me very well. All right, good one. Where can one find information on companies and their projects? You get that in the annual report. So on any website on the company, go to investor relations and you'll see the various years for the companies. And in my course, I show you exactly where to find these things, how to break down these things in a very succinct way that is not highly complex, so you would know what you're looking for when you're making an investment, Christian. But just go to investor relations and you'll find the information there in the annual reports. I'm interested in the course and the personal training. Great, Leon. Just reach out, right? I'm glad that you're interested. I'll be happy to assist you. And I think the course would be a good option for you as well. But we could talk about it if you're not sure. Also, what's the duration of the course? The course is 5 modules. You do it at your leisure. Um, I would say if you're diligent with it and you're setting aside time every week, probably could take you 2 months. Somebody, if they're very diligent and they're doing it every day, it's going to take you 2 weeks. Some people may not need everything in the course. So there's, as I said, there are things from budgeting to setting smart financial goals to budget calculator, calculating your net worth, how to analyze a company, how to construct a portfolio, all of these things in there with videos, with quizzes and stuff, as well as I said, access to me. So the course is really on your time. So it could take 2 weeks, it could take 2 months. Oh, that's Giselle again. So, boy, we over. Anyway, let me try to answer all of these questions. So, good night. So if I have an IPO through boss, can you invest in the market? Yes, you can. Or as another. No, you don't need. If you have a brokerage, if you have a brokerage account with boss, not a mutual fund, or because they have mutual funds and other things for that. But if you bought an IPO through boss, then you're good to go. All you might need is just some investment advice or guidance, which I can help with. Which broker is 2500 TT? So the two that I know of is NCB Merchant Bank and JMMB, right? Those are the two that I know that start with 2500. I definitely know for sure. So let me not comment on JMMB, but I definitely know for sure, 100%. Um, NCB Merchant Bank, the minimum starting is 2500. I reached late. What's the cost of the course? All right, Nicholas, I hope you got that information already. I think I answered that. Good night. Not sure if anyone asks, but just to be sure again, so let me just say the cost of it is $1,300. Good night. Not sure if anyone asks this, but can I access the international stock market with a local brokerage account? No, you'll get access to the local stock markets. You could get access to international investments through some of the mutual funds. That's indirectly, but to invest directly in the stock market, you're gonna have to open uh, international brokerage account. Mr. Kevin Knights, thank you for sharing this critical bit of information as financial literacy is key to financial freedom. Keep up this good work, sir. That's such a very nice message, Mr. Knights. I appreciate you very much, and that's very heartwarming. Those are the things that keep me going. Thanks so much. Okay, cool. We'll contact you. That's Giselle. All right. Chat is disabled. Can't even see anything. Okay. I stepped away. Not sure if it was when. So this is Nadine, when you make an initial investment in stock, do you have to continue? All right, I think I can answer that. No, once you can then start with 2000, and if that's all you have, and the next time you invest is next month or next year, then every time you get a chance to invest, you invest. You don't have to make contributions every month, or it's not mandatory, but it's advisable that every time you have income that you contribute to your investments. Phil, you mentioned a bonus coming in 2026. What do you think is a good or reasonable amount to invest in? The reasonable amount, Aisha. So this is the last question, and we're 10 minutes over. So Aisha, the amount to invest is what you can invest. So this is why I say it's important for you to know what surplus you have at the end of the month. So these are some of the tools that I provide, knowing exactly what you have available to invest. So the real answer to that is invest as much as you can, but that depends on your situation. Your situation meaning what is your what monthly commitments you have, what debt do you have, you know, what are the long-term goals, how much money you should be putting to long-term versus putting to short term. Um, and it depends also on the maturity of the bond and when money that you might need within a particular period and money that you can set aside for a certain time. But if you can afford to invest 5,000 easily without having everything else, you have emergency money, you have all the things, you don't have credit card, then that's what you do. For somebody that might be 10,000. For somebody else that might be 20,000. So it's really figuring out what is that sweet spot, what is the appropriate spot for you, so you invest as much as you can within your financial situation, meaning that as much as you can, not putting yourself out, meaning everything that is taken care of, right? The non-negotiables, which is your bills, everything that you have to pay, all of those things that you usually set aside money for. Or to remember, I said the first thing that you should do is pay yourself. So if you're paying yourself first, it means that the money that you set aside to invest monthly, then that's the amount that you do. Hopefully you have some money probably pooled up that is not emergency money that you just have sitting idle in a savings account that is not for emergency and it's just not earning much in the bank. Then yeah, you might want to put that into a bond. All right, it is 7:43. So what I want to say to you, because I know some people dropped off, I want to thank you again for joining. I want you to know that you do have everything that you need to take charge of your financial journey. It may be a bit daunting. You mightn't feel as comfortable or as confident today, but chances are you might be doing a bit better. And there's always an opportunity to improve. And the Fill the Gap I Invest course is a great tool. It provides a wealth of resources to put you on the path to all of the pillars and start investing. And you have direct access to the Fill the Gap team.